Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times.
Hello and welcome back to the Fintech Times News and Views podcast, brought to you by Vanta. Vanta helps you save time, money, and build customer trust, all by centralizing program requirements and evidence collections for frameworks like Dora. If you want to manage risk and proof security, then head to vanta.com/the Fintech Times to learn more. Francis, we're back once again. It's just you and me this week. So tell us how you've been and what's been going on.
You know, it actually feels like it's been a relatively busy week, I think. I feel like I was probably expecting it to be next week that things really got back into the swing of things, but no, I know that each week I've sort of been giving an update on how busy we've been, but it really does feel like we're back to normal now. And it is odd because I hadn't really noticed it, but until recently someone was like, January has taken a year for the month to go by. And I hadn't really noticed it, but now ever since then, I've like, yeah, it does feel like it's taken quite a while. And I don't know if that's just because we started with some holiday time, but ordinarily I would have thought that made it feel shorter. But no, here we go. It's been a good week. We've had a lot of interesting news, a lot of standout announcements, to be honest. And yeah, I'm looking forward to the conversation today.
Yeah, I agree. I think it's been good to see like a real surge in like news and announcements. We've seen a lot of like governmental and like regulatory news as well. It's like all aspects of like fintech and beyond are like really kicking off. And I feel like, I don't know if you agree, but it feels like there's a lot of like optimism around like the fintech industry that we didn't have like this time last year, if that makes sense. Yeah, I just feel like it's a very optimistic time right now.
Not only that, I'd say that it actually feels real because I remember going to an event at the start of last year and everyone was saying 2024 will be a fantastic year. And then it was all right. It was okay, but it wasn't anything breakthrough. Whereas I feel like this year has definitely, there seems to be a lot more substance behind people being excited. And yeah, no, I think it should be a very important year for fintech. That's my early prediction.
Ooh, that's a big prediction. But with that, why don't we kick off the podcast and tell us what article you're bringing to the table today?
Yeah, absolutely. So the article I want to talk about today was actually published at the start of the week, but I found it quite interesting to research and write about it. And it's about Blue Monday and how it impacts fintech.
Fantastic. And I'm going to be talking about a new study which is looking at the gender pay gap in the UK. But Blue Monday sounds like an interesting place to kick it off. So why don't we start with your article first?
Yeah, cheers. So as I said, it was something that was quite topical at the start of this week, but I feel like it's worth mentioning still because it's not just something that lasts a day, I don't think. I think it's an attitude that needs to be changed throughout the year. And essentially what Blue Monday is, for those that don't know, 2 decades ago, the term Blue Monday was created after it was supposedly calculated by Sky Travel that the third week of January was the most depressing day of the year. While there were a lot of timely things that took place in 2005 that impacted the results, like the weather and the state of the economy, some factors haven't changed 20 years later, like the gloomy reality of returning to work after their holiday season. And now that a lot of people work from home, those going back into the office, it's arguably worse as they have to go to work in the dark and also come home in the dark too. Not ideal. And I remember when I was at school, that was just the worst thing ever. But besides the point, what I found interesting was the impact that this would have on fintech. And that's what I wanted to really explore in the article. I found some research from the fuel expense company Allstar that found that over half of its respondents in a survey it did cited cash flow as an issue and a big problem that was sort of disturbing the productivity that people were having. And from an organizational standpoint, I feel like organizations or leaders in companies need to do everything they can to ensure they're getting the best productivity out of their employees. And the best way to ensure this is that making sure they are happy and healthy. I feel like I said sure a lot there, but we'll move on anyway. And what the article found was that the findings found, I should say, is Blue Monday has some very real implications across the board, with the post-holiday season leaving many with squeezed pay packets and budgets. So given that 80% of workers said that they are more productive when they are healthy and happy, as I said, Blue Monday may even result in reduced productivity, impacting and adding even more strain on businesses which may already be feeling the pinch when it comes to cash flow, as late payments are costing them £22,000 a year on average. So again, this is, well, actually, I'll pose the question afterwards. Some other firms that contributed to the article stated the importance of a supportive culture and workplace appreciation. And while those two are sort of similar, maybe two sides of the same coin, they are different. So I wanted to get your views on what the biggest motivator would be during the January blues. And that is sort of support, reassurance, or knowing money will just simply be on time because an organization has addressed problems like late payments. So there's no worry that, job security might be in danger or anything like that. And is that enough? That's job security and knowing that the money is going to be there on time. Is that something that organizations need to prioritize to sort of deal with overhanging debts? And of course, that goes on throughout the year. It's not just something that's restricted to January. So yeah, I wanted to get your views. Do you think support, reassurance, or money on time is the most important? Just let's say out of those three options in ensuring mental and financial well-being for employees.
I think it's like you say, it's quite a difficult time for many, especially SMEs, because obviously you do have that kind of psychological element of it's quite a difficult time at the start of the year. There's often a lack of optimism just generally in people's lives, and then that can, as you said, translate to the workplace. If you work for a small company that's struggling due to lack of payments, and that's kind of exemplified from the fact that a lot of people are off during Christmas, a lot of companies, shut down, and so these late payments, there's no one chasing them up. There's less companies that are actually in the office that are thinking, oh, let's pay this invoice now, and it can lead to a lot of unpaid invoices and late payments, as you said, which then impacts potentially the employees, depending on how much that impacts cash flow. So I think from an employee standpoint, I guess the most important is ensuring that they can be paid on time. But I think potentially equally important is just the reassurance that, the company isn't going through, a difficult time, and just explaining the situation. I think transparency is such a huge aspect for employees. And I think having that transparency and reassurance is something that's so important. And I think that's probably one of the biggest kind of factors in when you ask that question. I think that reassurance is potentially even more important. The more I speak about it, the sort of more important it seems, to be fair. And I think just having someone who can explain things to you and be transparent, I think that's really important.
No, 100%. And I think when you talk about the idea of reassurance, there's a big part as well, which is saying not only do you have a job that you have a job and you can, be safe in the fact that it's there, but you're doing a good job as well. Like the work you're doing is being recognized as helpful and impactful in whatever way, and it's being appreciated. And I think that is a big factor as well that probably goes a little bit unnoticed, I'd say, that perhaps firms don't sort of give the praise that they should to their employees, which in turn can sort of have this snowball effect, which impacts productivity, which impacts a business, which impacts mental health, and then you're spiraling. So yeah, I think it all starts with sort of just ensuring overheads are all cleared and that everything is, going to be paid on time, but then ensuring that employees are recognized and reassured and, appreciated for the work that they're putting in. But yeah, no, I think it was something quite timely, I thought. And again, just that idea that January has gone on for a while, but again, something that I think can really, people can take stuff away, like points away from this article and apply it throughout the year, and it will be just as impactful as now. It's not something that needs to just be sort of for a depressing January. It's for the entire year and ensuring that production levels are high throughout. But yeah, with that, why don't we go on to your article?
Yeah, absolutely. And if you're still feeling that kind of those types of blues, you're not feeling too optimistic, I'm not sure my next article is actually going to be particularly helpful to resolving that for you. And that's because I'm looking at as I said, a study looking at the gender pay gap in the UK. And the headline is essentially that it could take another 40 years to close this pay gap in the UK if the current rate of improvement continues. And that's according to a new study from the financial advisory ISEO. Now, ISEO analysed publicly available data from over 10,000 companies and found that while the gender pay gap is gradually reducing, it won't actually be until 2065 that we reach equality for hourly pay. Now, the analysis shows that in the last reporting year of 2023 to 24, women were paid an average of 12.5% less per hour than men. And while this is the lowest the pay gap has been since mandatory reporting was introduced for organizations with more than 250 employees in 2017, the proportion of men and women in the highest pay quartile still remains unevenly split, with 59% men compared to only 41% women. So still, when you look at the highest level, which is mostly C-suite level, there's a really large disparity when it comes to gender. And essentially, this report from ISEO highlights the need for more focused and urgent action from employers and policymakers to accelerate change, as it also found that 23% of organizations either experienced no change or actually saw their hourly pay gap worsen over the last year, indicating that progress is really uneven and it's not just gradually improving everywhere. There's a real kind of up and down sort of motion to it. So looking specifically at financial and insurance sectors, there was sort of an average gap of 23%, which is actually far behind other sectors such as public administration and defense, which are leading the way, with less than a quarter of employees in the sectors having a pay gap greater than 10%. So there's still a big disparity when you look at industry to industry. And I thought that was just a really important and interesting kind of point, is that you can talk about the sort of gender pay gap and say, at C-suite, there's still a lot more men. The women in the same roles are getting paid slightly less. It's actually something that differs industry to industry as well. And, I really just wanted to get your take on, firstly, what's your reaction to this? Are you surprised at still the kind of huge disparity that exists, given, the kind of mandatory reporting rules that have been implemented? Or, do you think it's kind of almost inevitable that even if you do kind of push these rules and these initiatives and policies, it's still going to take a really long time to solve the issue?
It's difficult because I think it's just insane. I think the findings from the report in that 60 years is just a ludicrous number, and it feels, even the lunacy of it and the madness of it, it's highlighted because it feels like everyone says the same thing. Whenever we hear about the gender pay gap, it's always, how is this still possible? Like, surely it's not a thing anymore. Everyone's always saying, oh, my organization's doing this, my organization's doing that, to ensure that it is an equal playing field for everyone. But that simply just can't be true if the stats are to be believed, which they are going to be correct. But I think the only way it can really get tackled is if organizations sort of look inwards on themselves. And I don't want to say there's no point in, pointing out the issue, because that's not the case at all. But I just think it's a little bit sort of null and void if organizations are preaching about things needing to change when they're not even enforcing pay equality themselves. And so the most impactful way that I think things will change, and that, we won't need to wait this long, is by sort of organizations constantly sort of reevaluating and not just assuming that, everything is fine. They need to be actively checking to make sure everything is equal for everyone, for every employee, no matter sort of what status they are. And to put it into sort of quotes, I think some organizations probably do need a push in the right direction, shall we say. And that's where sort of regulations can come in. But it feels very frustrating. I think that's the biggest takeaway from it, is that despite everything that everyone says, and despite, the general belief now that, it's the way it should be, everyone should be paid the same, no matter, it's based on the role, not the person. And the fact that we need regulation to sort that out is just extremely frustrating, and to enforce it, it's annoying, but it's something that I think has to be done. And I think the more seriously organizations that don't follow it are punished, the more of a sort of warning it will be to others that, no, you can't get away with this stupid mentality that, it's outdated. It's not a thing anymore. So yeah, I think it's tough. In answer to your question, I think it still probably will take a lot of time realistically, and that's just not what you want. But unfortunately, I think that's the reality of it. But I think regulations and sort of just that constant, I think it's just employees and employers holding each other accountable. I think that's really what's going to start to make a difference. And yeah, I mean, I'm optimistic for the future, but it's just frustrating that it will take that long.
Yeah, I agree. And I think something that stood out to me from Mark Jones, who's the reward and benefits partner at Izio. He commented on the findings and basically said that, there is a real deal of the fact that employers who take the necessary steps to address this problem will not only improve their pay equity, but they're also going to gain a competitive edge in attracting and retaining top talent. I think that's a huge kind of aspect. Is there's a real lack of, as we say, women in these sort of C-suite top level jobs in the boardroom, and that's kind of leading to the majority of this disparity when we look at pay. And realistically, a lot of that is driven by the fact that women aren't given the same opportunity to get the experience to build up to that level. They're not given the same opportunity even when they have that experience in the application process. And I think there's a lot of proof of that, just given these stats, but also, when you look deeper into how companies and people's mindset when they're selecting candidates to employ. And I think while we are seeing that gradually improve, I think it's still frustrating to see that a lot of that attitude clearly does still exist. And hopefully there is some sort of bit more, like they say, policy that can be introduced that really tries to enforce it. But obviously it's difficult. You can't just say, you must have 50-50 men and women split, because naturally that's not how things work. But you'd like to think throughout an industry that you will eventually be able to get that, on average, roughly 50-50 split between men and women. And unfortunately, we're still so far off that obviously initiatives are required. But obviously it's such a difficult thing, because you can't just implement rules to say you must employ X amount of women, or, we've got this kind of equal opportunities initiatives when it comes to employment, but it's obviously not quite fully impacting, and helping resolve this gap. And I think it's quite a frustrating thing to see. And hopefully, like they suggest, there are ways to reduce the gap and try and speed up at least this prediction of 2065 and hopefully reach there a lot sooner. But I think it's still, even if it is quicker, it's going to be a long time coming. And hopefully that, the great minds out there can think of something to really speed up the process, because I think it's something that really does need to be done. But with that, I think, we've spoken about these quite extensively. And if you liked any of what you heard in this episode, or you want to read our daily fintech news updates and insights, then make sure you head on over to the fintechtimes.com. And that brings us over to our final segment, which is What I Learned This Week. And each week we get so much news and insights crossing our desks, and we like to just pick one extra thing to share with our listeners each week. So Francis, what is it you've learned this week?
So this week I found some insights from the financial service provider to the underserved in emerging markets, PayJoy, really interesting, as it revealed how smartphones are enabling working mothers in Mexico to have financial stability. And it found that 95% of those working outside the home credited their smartphone ownership as a key enabler for work, and thought that was really interesting.
Fantastic. And I picked something that's kind of related to your news story that you spoke about earlier on, and that's new independent research from the embedded finance specialist Weaver, which found that employees lose an estimated £690 million annually in unclaimed and unpaid expenses in the UK, with 81% of office workers being left out of pocket by their employer for less than a month, which leads to financial and mental health concerns. And I just thought that was interesting to see that even that kind of issue still remains in financial services. But with that, Francis, thank you very much for joining us. And hopefully we'll have the trio back next week.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode, and continue the conversation using #TFT News and Views, and follow us at the Fintech Times.